Welcome all to the soft launch of mine and David's new show called The Node. Starting Monday, it's going to be at the same time, but we're going to be running for 2 hours instead of 1 hour. And we're going to be focusing on news. We're going to have set segments. We're going to have the news. We're going to have guests and interviews, and just kind of putting out alpha. And then at the very end, we're going to have the DeFi education or just investing education. So how's it
Gonna be
going, brother?
awesome. I'm doing well,
Yeah.
Mike. I'm really looking forward to this, man. The node is going to be awesome.
Oh,
That little logo that you got put up there, man, that's pretty cool. Uh, the website that we threw together last night. I mean, dude, it's going to be absolutely amazing. I'm really looking forward
yes.
to it.
No. I'm really pleased at how fast this is coming together. So yeah, it's great to freaking have somebody that has the bandwidth that you do and the skill sets that you do to to freaking help build something like this. Me and Jeff, we've been kicking and screaming trying to get the other channel going, but he has a full-time job and other responsibilities, so it kind of falls on me to do most of it, and it's a lot of work, man.
It
Having
is.
somebody to help it's like going to the gym. Having somebody at the gym pushing you and motivating you, it definitely helps you be more productive.
Yeah,
But
man.
I want to really quick. We haven't got the YouTube channel up yet. We got to wait 72 hours since the creation of the new email. But if you would like to help us start to grow this is our X account. It's just let me zoom in on it a little bit. Where are we at? There we are. So it's just at the node channel. So the node was already taken. So everything, all of our socials are going to be at the node channel. So if you want to check that out, give us a follow. As you can see, we're live on it right now. Just got the premium service this morning so that we can stream there. And over the next week or two, whenever we feel it's appropriate, we're going to start only streaming to the channels that are branded with the node. So we're not going to be doing it on DeFi crypto and airdrops. We're not going to be doing it on DeFi University. We're just going to consolidate down just so that we get everybody in the same place. We love the chats being active. All of you, talking to us, asking questions. It just makes it flow a lot easier. So, what do you got?
Yeah,
What do you
man.
got, Dave?
Oh man, so I'm just watching markets, always watching markets, and
Mhm.
just working on Derive because that's really my background. My forte is options and options trading, and so I built yesterday live during a live school call. It took about an hour and a half or so. I built a trading bot that allows me to just pull from the Derive API, and I can see all of my positions. I can see, a custom options chain. Um, I'm actually looking at it right now, and so there's a specific strategy that I've run for a decade, and I'm going to automate the thing. And so built out the framework and the mock-up of, well, a lot more than the mock-up, built the backend out too, for this trading bot, man. And it is really, really cool. I've got some debugging work to do, but bro, like I'm really excited for that because teaching this stuff, look, we've all learned CLPs. So if we learn the liquidity provision, if we learned how to provide full range liquidity, how to provide concentrated liquidity, dude, it's
Mhm.
just one small step to go from concentrated liquidity to options because
Well,
they're
let's
they're
go.
very
Let's
similar.
Well, let's go definitely go deeper on that on the the tail end of the call here.
Yep.
But let's jump into the news. Just to kind of start getting into the rhythm of the the format. But I got a couple of things pulled up. So everyone thought it was Jane Street that Zach XBT was talking about when it came to the investigation. Turns out that it wasn't. It was actually Axiom. So this is the post from Zach XBT. It says, "Meet Where's Brox, one of the multiple Axiom Exchange employees allegedly abusing the lack of access controls for internal tools to look up sensitive user details to insider trade by tracking private wallet activity since early 2025. So this is, let's actually go to it because there was, if I remember right, there was, yeah, here we go. Axiom is a crypto trading platform founded by Mist and Cow in 2024 after going through Y Combinator's winter 2025 batch. It quickly became one of the most profitable companies in the space, generating $390 million plus in revenue to date. I was retained to investigate allegations of misconduct at Axiom after receiving reports.
Hmm.
Brock is a current Axiom senior BD employee. Do you know what BD is?
No.
Like something developer, I would guess. Oh,
Uh,
anyway.
bitch made? I don't
Yeah,
know.
yeah. Dick. Based in New York. In the clip, Brooks states he can track any Axiom user via reference code, wallet, or UID, and claims he can find out anything to do with that person. He also describes researching 10 to 20 wallets initially and slowly increasing over time so it does not look that suspicious. In a separate clip from the same recording, he sets ground rules for how to request lookups from him and then says he'll send the full list of wallets. The full recording is a private call of the group members strategizing. So it looks like there's a group of people that were doing this. April 2025. He shared a screenshot from an internal Axiom dashboard displaying private wallets for the trader Jerry. In August 2025, Brooks sent a second image showing the registration and connected wallets for the trader Monix. August 2025 discussed lookups of Axiom users who traded the meme coin Aura. The group created a Google sheet compiling wallets of multiple KOL targets, mapping out wallet addresses gathered from data obtained via the internal Axiom dashboard. Multiple KOLs named on the street or on the sheet, excuse me, or in leaked screenshots were contacted and independently confirmed the accuracy of wallet data attributed to them. Zach XBT, one of the targeted KOLs, was Marcel, a trader with a poor reputation for using his followers on X and Telegram as exit liquidity. He was targeted due to buying a large portion of the token supply for meme coins, known as bundling, from private wallets before promoting them. This is why me and David talk about you need to be careful with a lot of these influencers.
Yeah.
Is they all they get early access to a lot of these tokens or the projects. They contacted me before. They contact you and say, hey, we'll give you tokens if you help us promote this project, and we refuse to do it. But there are people that do that. Traders like Marcel are prime targets for this type of abuse since address reuse is less common and private wallets are rarely public, which makes privileged info much more valuable. Let's see how much longer this goes. Okay, yeah, it's not too much more. The
So
main
Mike,
wallet, yeah, go ahead.
so the thing that I'm curious about here is where's the crime? Like it doesn't this looks like, it looks to me kind of like these guys are brilliant and what they're doing is they're like aggregating wallets, like basically like doxing wallets to individuals and they're building intelligence. That's what it looks like. But I don't see a crime. Like wasn't the DOJ investigating this or something?
The investigation that's being launched, I think that it's just Zach XBT, because earlier on, let's see where I can find it. Yeah, Zach XBT. I was retained to investigate allegations. So I don't know of any like regulatory bodies that
Mm.
are investigating this. I'm, from reading this morning, it's just basically Zach XBT is going through and exposing these guys for basically, and I don't know even know if it would be considered insider trading because of what you just mentioned. It's all on-chain data that any of us have access to, so
Right.
it's public information. So this is why it's so important that we don't rush. Not that Jane Street wasn't big news. It just ended up not being, I don't want to diminish that news that came out, yesterday and the day before about Jane Street and manipulating the price of Bitcoin, because that is a very big deal. And there is what appears to be a lot, insider trading, and that is being investigated by regulatory bodies. Because what I talked about on the show was based on court documents, redacted court documents. Personal information is redacted, but the overall, investigation is lined out. So, again, always do your own research, but we're going to try to break the news whenever we can on this new show. So I mean, that's a very valid point, David. Do you want to expound on that a little bit, or?
Yeah, so I mean, ZachXBT, like first and foremost, ZachXBT is a bot. It's a brilliant bot. It's very, very smart. I think, doesn't it pull from like 400 or 500 KOLs on X, YouTube, and different places?
I
And
didn't
then
know
it,
it was a bot.
yeah, it's a
Hearing
bot.
everybody talk about it, and not that Rand Nooner is, a super, Johnny on the spot accurate dude, but he was talking about Zach XBT must be like on the spectrum or something like that. So
It's a
he doesn't
bot.
even spot. So well, I mean, that
Yeah.
goes to show having a huge fight. Not that I'm not saying anything bad about Rand, but it just goes to show you it doesn't matter how many followers you have. It has to do with the quality of information. So just because you see a channel that has, I mean, because there's bots, like me and David could buy a bunch of bots to subscribe to our channels,
That's
and
not a bad idea, Mike.
right,
Maybe.
I have hundreds of thousands of subscribers,
Yeah.
but it's we want to be on the level here. So don't just follow, or don't just look at people and judge their credibility by their following. Look at the content. Look at the quality of the content of the individual, because there's a lot of
Yeah.
small accounts on X that have very good content.
And there's also a lot of really big accounts that are just completely full of shit. So, like
Exactly.
you gotta be able to parse and find out what's valuable and what's not. Like so, ZachXBT is a bot. I think it's like a Langflow bot. I think it was built in like 2024 or something like that. Back when Langflow was like really, really hot for building those bots. Remember those frameworks for building
I
the crypto DeFi bots back in 24? I'm
I
almost positive. Yeah, I'm almost positive that ZachXBT was built back then. But it's a great bot, but it also hallucinates a lot. So like I don't know if they've updated it or fixed it, but it's really, really easy to build a bot that can pull a bunch of data and then sound extremely convincing. Like, it will sound so convincing. And if you don't have expertise in this area, then it can be really easy to be misled. So you just got to be
yeah.
careful. You always got to look into the account. And, unless you're on Noster, like if you're on Noster, then if you're on social media on Noster, like on Primal or like on Amethyst or something like that, well, then
Mm.
the keys are an individual's identity. So you're much less likely to see any spam or bot content. But on every other social media platform, you kind of have to assume that unless you know that you're actually reading a post from a real live human, like a real human, unless you know that for sure, then you could very well just be reading something posted by a computer, by a
Well,
bot,
and,
you
and,
know?
and I'll be honest. Me and David are talking about, for our X account or some of our socials, putting together an AI, like Zach XBT that uses KOLs, basically trusted individuals that we know put out quality content, and to aggregate it, and just automate those posts to ensure, that we're going to QC them, go through and make sure that they're accurate, and things like that. But it's just, I mean, it's a force multiplier.
Yeah.
I mean, you could have a team of people scouring the internet for a news, or you can have an AI do it 24/7, 365, while you're sleeping, and finding only the best content. So yeah.
Yeah, big difference between what you're describing, Mike, of using bots to just basically scrape social media to put together like the news of the day, like a
Yeah.
feed, something like
Oh,
that.
absolutely.
Yeah,
Yeah.
big difference between something like that and just spinning up like, tens of thousands of bot accounts for the purpose of, making a following when really it's artificial, or, spamming a bunch of views to make it look as though someone is really popular when really it's fake. Like you can
Yeah.
use these bots to do all sorts of shenanigans. Um,
Yeah.
so you'll see that a lot on YouTube and X, really, because when you see accounts that have like massive followings, but they don't get any engagement whenever they post,
Yeah.
um, or whenever they go live or whatever, then you're probably looking at fake engagement, fake followers, fake
Yeah.
subscribers.
Yeah.
So, yeah,
And I'm seeing a lot of that on a lot of channels right now, just with the markets being down and stuff like that, is just a mix of kind of lack of interest and kind of it's pulling back that curtain.
yeah. But Mike,
But,
you know what's so funny about that, man? Like, this is the time when you should have the most interest, because this is when
well,
the best
this
deals are out there.
this is when people should be interested. However,
Yeah.
people's psychology, they see the markets down and they're like, oh, crypto's a scam. I'm not going to invest in it. Or, you know,
Oh,
and but that is how we are going to be making money, because we are engaged, we are learning, we are investing in these down markets when it feels shitty. It feels shitty to invest in crypto right now. If you're just looking at the price, if you're not looking at the fundamentals, if you're not watching what's being built, if you're basing it on emotion. But if you're basing it on what's actually being built and what's being done, you're very bullish right now. And it's a lot easier to invest. Same on the other end. When everything's euphoric and everything's gone to the moon, it feels like shit to sell and take profits because you're like, oh shit, it could go up another 100%, 200%, 300%. But you need to rein in that emotion and take some profits. At least get your initials out. That's
yeah, no kidding, man. You're absolutely right. Like I can't tell you how many people I saw over this last bull cycle just, watch their bags run up and then watch them run back down. Like
and I'll
they
be
thought,
honest, I was one of them. I got up to about 100K in my portfolio, and but the alt season hadn't started yet. Bitcoin had run, and a couple of alts had run, but we hadn't seen the full bull market, and I hadn't hit my take profit points that I had set. Because overall, I was just trying to get like a 10x. I wasn't trying to get like a 100x or anything crazy. But I between where I was at and that 10x, I had multiple take profits on my individual holdings, and I just never hit any of them.
yeah,
Nothing. Other than XRP and all that because I off that with a quick.
XRP. Oh,
Oh, dude!
XRP.
As soon as
Yeah,
all that the ISO tokens pumped, I sold them all, and that's been my
yeah.
only saving grace. But let's jump into Jeremy Allaire. Those that don't know, he's the CEO of Circle, the creator of USDC. He says we are at an inflection point. The internet is evolving from moving information to moving value. This is what they talk about with Web 3. It's the evolution of, Web 1 was basically just an informational page. You couldn't interact with it. You couldn't click on things. You couldn't shop. You couldn't do any of that. Web 2, it added that layer of being able to interact with web pages. Now, Web 3 is what they're calling Web 3 is the actual moving or the tokenization of value and the movement of value. So, blockchain, stablecoins, and AI aren't separate trends. They're converging into something much bigger, a reimagined global economic system built natively on the internet. We are entering a world where, in my view, tens or even hundreds of billions of AI agents will interact and perform economic functions over the internet. They'll need programmable digital dollars and open infrastructure to do it. That's exactly what we're building at Circle. Circle's Q4 showed this isn't just a vision anymore. It's happening. USDC expansion continued. Our share of stablecoin transaction volume approached 50%, and our broader platform expanded well beyond issuance into infrastructure layer on-chain finance. ARC, CCTP, Circle Payments Network, and StableFX, each one building a block for what comes next. The opportunity ahead has never been greater, and we're just getting started. So this is kind of just a snapshot of kind of the data of their Q4 2025. So what are your thoughts on that, David?
Oh man, I've got some thoughts on this. So, first and foremost, it's great to see that the U.S. Treasury system is coming on chain. That's what I see here with Circle, and what Circle has done so far is amazing. Like it's great to see. Same thing with Tether, But what do these companies do? These companies buy U.S. Treasuries. They buy
Mhm.
short-term bills or cash equivalents, and then they mint their tokens,
Mhm.
USDC in the case of Circle, USDT in the case of Tether. And
Yeah.
by law, they are not allowed to pass along that treasury yield to holders of their tokens. So that makes these businesses like money printers. They are just cash generating machines. But that's not so good for holders of USDC or USDT, right?
Mhm.
Because if you're just holding the token in your wallet, you don't earn any of that treasury yield. So not too good for holders of the token. But you've also got to think,
Well,
what
I
is
mean, yes and no. I mean, I can see where you're coming from, but if you hold like USDC and USDT, there is yield opportunities because I know that you even use stables to earn yield. So you don't use them earn it off the treasury, but you can use it in DeFi to earn yield.
right? Absolutely, you can
Okay.
100%. But you've got to like take action in DeFi and deploy that USDC or USDT into like a vault, let's say on Aave, where you can earn some yield that way. But you should be natively earning that treasury yield. And the fact that you're not, that kind of sucks. So
Mhm.
that's the first thing. The second thing here is, this probably should have happened years and years ago, and it's moving very, very slowly. Like what I mean by that is the upgrade from the traditional banking infrastructure to on-chain infrastructure. Like everything is going to migrate on-chain simply because it is much, much better than what the banks are using right now. So the first point is this is the US Treasury system coming on chain. The second thing is it's massively overdue. But the third thing is here is that, okay, I like that this is happening, but I'm more of a libertarian. And so that means that I'm more of like, focused on Bitcoin.
Damn
I'm like,
the man. Yeah, get out of my pocket.
yeah,
Because
get off my lawn, like
Mhm.
so. But what I see here is okay. It looks like the U.S. Treasury system is going to subsume like EVM chains. It's like if you can imagine a big blob, and that's the Treasury system, and then EVM chains are like this little speck. The big blob is just going to eat that little speck, man, and you're going to see like all of these Wall Street really complex pieces of financial engineering move on chain. And that's going to be super cool. But I'm focused on the sovereignty. And as long as you're operating in this US Treasury system, you really are not truly sovereign. The only way you can really get to truly sovereign is if are operating on Bitcoin and Lightning and with Nostr. But
Mhm.
this is great news, though. This is great news because more adoption means more user growth, which means
Mhm.
more awareness. And then all of a sudden, one day you'll be able to go down the street to your favorite store and buy a sandwich with USDC, and that will be normal. So I'm
Yeah.
looking forward to that moment. So this is all good. This is good news. But for me, I like to focus on the sovereignty aspects of it.
Oh yeah.
And
Yeah.
as
The
yeah,
libertarian in you's like screaming at the top of his lungs,
I
but
know.
the realist in you is like, okay,
Exactly. This is
I
good
get it.
news. This is
Yeah.
good news, no doubt.
So this is just something funny I found somebody created. They just said Axiom employees, after finding out they can insider trade and insider bet on themselves being exposed as insider traders. So basically using the the what are those called? Those betting platforms everybody's using.
Like Polymarket or Kalshi.
Basically, yeah, that's basically what they're talking about. Is the Axiom employees betting on if they were the ones because there was the right here
Oh
where
my God,
35%. So
that's
it's
amazing.
basically being excited that they can bet on themselves and make money. So
So what exactly is it that they're accused of doing? I can't quite. So what is Zach XBT saying that they're like accused of doing here?
Basically, I would guess that there is, that they were using the information like on their databases to compile information to for personal reasons for their little group. They created like a little group, and they were using the data from Axiom, in the dashboard to compile their own data to basically do a little something on the side. They created like a little honey pot for themselves. So is it
Oh,
is it illegal? I don't know. Is it unethical? Yes, because they're using company resources for personal gain. So
well, yeah, that would be a problem. Um,
yes,
using the company's stuff to benefit personally, that would be a problem. But most hedge funds, Mike,
that's a little more than taking some sticky notes and some pins home.
yeah, I would say so. But most hedge funds that are good, like the really good hedge funds, what they
Mhm.
do is they will build like a dossier on a company, and they will get every single piece of publicly available information they can possibly get, every single piece of information, compile that into like a dossier, and use that to build a profile of the company to determine, are the shares over or undervalued. And like that to me seems kind of similar to what these employees were doing by, taking a look at different wallets to find out whether they should buy or sell certain meme coins. Um,
Yeah,
so not necessarily illegal, but unethical for in the case of these guys at Axiom, probably.
yeah, yeah. In totally different case than than the other Jane Street. Jane Street. It's that's uh, and that's kind of I want to transition over to that a little bit because everyone was saying that Jane Street at 10 a.m. every day was basically dumping Bitcoin. They'd short it, they'd dump it, and they were making a bunch of money off of it. So this Alex Kruger says everyone says Bitcoin dumps at 10 a.m. every day. I pulled the data, and it's not true. Since January 1st, IBIT's cumulative return in the 10 a.m. to 10:30 window is a positive 0.9%. And in the 10 to 15 window, it's negative 1%. Noisy, not a systematic dump. More interesting, the performance pattern in both windows closely tracks the NASDAQ, and which I do believe that you brought up
Yep.
yesterday on the show. The 10 a.m. dump is just broad risk asset repricing. The narrative is wrong. So I'm going to admit in a very general sense, understand what he's saying, but I know that you can explain it better. So I'm going to kick it over to you, David.
Sure. Yeah. So, I follow markets like this tick for tick, 24/7,
Yeah,
365. And so what
that's
I've
why I'm kicking
noticed,
it to you.
yeah, man. So like what I've noticed with this is whenever there is a big move in equities. So what I mean by that is it's got to be like, over the course of like a couple of 5-minute candles, and like maybe 1 or 2 percentage points, like a big move. So if the S&P moves over the course of a couple of 5-minute candles by like 1/2 of 1% or 1%, that's a pretty big move. And that usually feeds through into Bitcoin. So if you see the S&P dump by 1 percentage point over the course of 10 minutes, you'll probably see Bitcoin dump too. So the correlation over a longer period of time between the S&P, the Nasdaq, and Bitcoin and other digital assets really isn't all that great. So
Mm,
what he's talking about here, this 10 a.m. dump, number one, it would be really stupid for any institutional desk to just sell an asset every day at 10 a.m. because
yeah.
their competitors are going to see that, and
And
they're
they're
going
gonna
to
or they're
well,
gonna they're
or
gonna
they're
find
going
a
to
way to
they're going to buy it.
yeah.
If they know, or maybe they're going to front run it. They're going to get in front of it. So I don't think that anyone who's running an institutional desk is going to be just selling Bitcoin like programmatically at 10 a.m. every morning. That doesn't really make any sense. And what this guy dug up is that he didn't see it in the data. So that makes a lot of sense to me, that the whole idea of a 10 a.m. dump, just not
Mm,
true. But the interesting thing here is the correlation between Bitcoin and the Nasdaq. Now, I don't think the
Well, do you
correlation
want to share
between.
the screen and show
Oh
people,
yeah,
because that's really important, because that we went over that yesterday, before this news even broke, and not to say that we knew something, but it's an interesting data point.
yeah, for sure. Here, let me. I've got a post in the school community actually all about that, and it's right here: Bitcoin X software. So this correlation here, this is really really important for us to watch because Bitcoin has been trading in lockstep with software, and the correlation. And so this screenshot is actually from like 2 weeks ago.
Hmm.
Um, but this correlation basically, since, so I don't know, you want to say since like 2023, like basically the beginning of this bull cycle, this correlation has been like a positive zero point 0.7. So
Well,
while
so everybody knows that blue line is text, basically tech stocks.
so
The
the blue is Bitcoin, and
Oh, sorry,
the
I got
and the
I was
candle, well, right, but you see the fact that you couldn't even tell, like, they look so
yeah.
similar, right? Yeah,
Well,
they
it's they're in lockstep almost.
I know. And so, think about all of the different assets and asset classes and indicators that we've said over the last, 3 years have been positively correlated with Bitcoin. At one point it was the money supply, right? Everyone
Yeah,
was screaming about money supply, like, oh, money supply to fresh all-time highs. That must mean Bitcoin pumps. And then that correlation broke. And so now money supply is at all-time highs. Bitcoin is in a bear market, solidly in a bear market. So that correlation was positive for a period of time. Raoul Paul was famously calling for the banana zone on the back of that correlation, and it
yeah.
broke down. So, that's the first one. And then, you could talk about the
And
correlation
again, he's a
between,
smart dude.
yeah,
He's a
yeah,
smart.
really smart dude, man. And look, everyone's going to be wrong eventually. So that correlation between Bitcoin and the money supply, that broke down. It was positive for a while, but no longer. And then we had, a positive correlation between Bitcoin and gold with like a little bit of a arbitrary lag time at one point. That correlation broke down when gold and silver and metals went parabolic, and Bitcoin did a whole bunch of nothing. So that correlation broke. And then, we had a positive correlation between, actually, this is interesting, positive correlation for a while between Bitcoin and the dollar. When the dollar was really rallying, when was that? I'm just going to look over here at my other screen real quick. I think that was, the big rally in the dollar was at the end of 2024, September to Jan. So September of 24 to Jan 25,
Mhm.
when the dollar really rallied, well, Bitcoin rallied also. So
Mhm.
there was a really tight positive correlation between the dollar and Bitcoin during that brief period of time. And guess what? That correlation is broken down. Now it's just a little bit negative, meaning if the dollar pumps, Bitcoin dumps, little bit negative. But what we're looking at here, this is software. So software has just been getting dumped. And Bitcoin for the last 2 years or so, but maybe you could call it the last 2.5 years, has been very tightly positively correlated with software. So
Mhm.
that correlation has only increased basically like,
Well, you can see
since,
you can
yeah,
see at the beginning. Bitcoin, was flat there at the very beginning of kind of the upward trend, and that the tech stocks, they pumped and they trended sideways. They both trended sideways at the same time, and then Bitcoin took off, and it started to, and slowly you can see it got more and more in line, or more and more correlated as time went on, to where they're almost like on top of each other now.
yeah. I mean, basically, since the April 2025 tariff tantrum lows, which you can see
Mhm.
right here, I'm just marking with my mouse cursor. So there's the April
I can't
lows.
I can't really see where you're marking.
I'm just trying to like, mark with my cursor here. I don't know if you can even see my cursor. How
I
does
can't
the
see
screen come? You can't see it. Okay.
Yeah, can you zoom
I can't, not really.
in? Okay.
But here, let me see. Maybe what I can do is I can redraw this using Trading View. So I'm just going to hop in here. I'm going to change my screen share, and then we'll be able to take a look at this in Trading View. And that way I will be able to mark this. Okay, so let's take a look. Here's BTC. And I actually want to go ahead and just bring up BTC USD because that way we've got, all the data. I need
Mhm.
all the data going back forever. And so here's Bitcoin, right? And so what we want to do is we want to overlay on top of it IGV. And so before we do this, what even is IGV? Well, IGV is a software ETF. That's what it is. And this software ETF, some of the big names in this ETF are going to be Oracle right here,
Mhm.
which has just been getting sold, from 350 all the way down to 135,
Mhm.
basically over the last like 6 9 months or so. This is massive capital destruction. And then take a look also at Microsoft, really, really big name in IGV, two big
Mhm.
software players. So I'm watching Oracle, Microsoft, and IGV to help me figure out what Bitcoin could do. And
Okay.
yeah, and now that I see IGV here, let's just go ahead and take a look at IGV real quick. I see IGV, and if we just zoom in, take a look at this pattern. Let me just go ahead and highlight this. You see this gap down, Mike, that I'm highlighting with this arrow here? That
Yeah.
that
That
gap.
CME gap.
Well, so this is
Oh,
actually just an ETF. So
sorry. Okay.
there's and this trades in the SIBO. So this is going to trade, just during regular trading hours. And
Okay.
this horizontal right here, this is an important level of support. If we zoom out a little bit and
Yeah, you
just
can
take a
see it.
look,
It's been support multiple times. One, two, three,
once,
is
twice, 3, 4, 5 times. So, a bunch of times this level has been support. Here's the problem with that. The more times a level of support or resistance for that matter,
tested.
yeah, the more likely it is to fail. And
Yeah.
so this is actually the fifth test. And the bounce that we got over the last couple of sessions here, if I just zoom in so we can all see this clearly. So we got the gap down, the
Yeah.
test of support, and
Okay.
then this is called a dead cat bounce.
Okay.
Okay. That's what this is called. So
Thud.
this
It's
is
a thud.
Yep, this is a dead cat bounce, man. So we got this gap fill. We got the
Mhm.
gap fill. Gaps like to fill. They almost always
They do.
do.
They
Yep.
love to get
So we
fill the
got the
gap.
we got the gap fill, and then take a look at today's candle. So today's candle, and we've still got like 3 hours, or so, 3 hours and 20 minutes until the close of the cash session today. But, this so far looks like, a reversal tail. So this wick on this daily candle, this looks like a reversal. And it would make sense. Bounced at support, the fifth test of support, fill the gap, push a little bit higher, and reverse. And so
Mhm.
it looks as though software is putting in just another lower high. So we can go
Mhm.
ahead and mark all of these lower highs. Here's the first one. So there's the high. Here's the first lower high, second lower high, third, fourth, and probably the fifth. So
Mhm.
if we see IGV make a push down towards its level of horizontal support at 76 and a half, well,
Mhm.
then I would expect Bitcoin to fall out of bed again. And we're already
Go
starting
down
to see that.
into the
Yeah.
50s. Yeah.
Yeah. Go down into the 50s. Maybe it gets all the way down to 48 because that's
Mhm.
where the horizontal support is next for BTC, all the way
Gotcha.
down. Yeah, all the way down here. You see that level? So
Yeah.
yeah, back
Yeah,
in
it shows
Jan,
resistance.
yeah, so it was resistance, flipped when it broke, became support, held as support. And then now, if we get a breakdown of 60K, then the next level of support, if we zoom out here on Bitcoin to a weekly, that next level of support would be the 200-week moving average. And so if I
Mm,
just throw down this 200-week moving average, you can see the confluence. You see that trend line? And then
yep.
let me just go ahead and see if I can remove that. So this is the 200-week moving average here on this futures chart.
It's the stars aligning in male astrology.
Yeah, man, it really is, this stuff, it's just pattern recognition, looking at these charts.
But you know what? There are patterns, and in patterns, there are they tend to repeat. It's that whole saying that history doesn't repeat itself, but it often rhymes. You're
It
just
really does.
increasing your odds of being able to determine what the markets are going to do. It's not 100%. Nobody's 100%, but it increases your odds. But go ahead.
Oh yeah, yeah, yeah. I mean, for me, I've watched, I don't know, a million charts or something like that, and over the course of 12 years, 14 years or so. So like when you learn how to read a chart, you can literally just throw the chart on the screen and immediately see patterns on the chart that you've seen on other assets.
Yeah.
And
Is
these
that
patterns,
muscle?
yeah, the patterns repeat. So I think that this period here is this period here from last cycle. And I
Okay.
think that Bitcoin is going to eventually, over the next couple of weeks, break below its 200-week moving average and move down first to 50K. I think
Mm-hmm.
that's what makes sense to me. And what does that mean for alts, though, Mike? What does that mean for alts? If Bitcoin makes a move to 50, well, that
They're
may
going to much more heavily.
dude, they're going to get just dumped. So ETH, if we take a look at ETH, if Bitcoin moves to 50, there's no way that ETH is going to be able to hold 1600. So it'll likely move to like 1000 or maybe 1100. We take a look at Sol. If Bitcoin goes to 50K, then Sol would likely move to at least $30, something like that.
Yeah.
35, 30. If we just run down this list, man, like here's Tau, one of my favorite interesting projects. But again,
Mhm.
Bitcoin leads. So if Bitcoin makes a move to 50K, then Tau likely goes first to 90 and then maybe even as low as 45. If we just
Mm.
take a look, that level of support comes in first at 90. But then really, you got to start thinking about the bear market lows from last cycle for every single altcoin, every single one.
Mm.
So, yeah, it's really just a matter of what is Bitcoin going to do? And you ask yourself this question: is software leading Bitcoin, or is Bitcoin leading software? So, here's BTC USD.
Which one's the dom and which one's the sub?
I know, right? Like which is which here? Let me see if
Who's the
I can
top
just
and who's the bottom?
I know, right? So here we go, man. Let me throw down IGV. And so this is IGV in the blue, this blue line, and this is Bitcoin underneath it with that the candlestick chart. And so basically, since the start of this bull cycle, they've been pretty positively correlated the entire time. But that positive correlation has really picked up since the April lows. So if I just highlight this, if I grab this, I think that basically like right here, that's when the correlation became super positive. And I wrote about this in the DeFi University school community, just talking about, and I've had that pinned for weeks now because I think it's super important. Like
Mm.
this positive correlation between software and Bitcoin, it just allows me to, look at Microsoft, Oracle, and IGV. And if they're dumping, then I can be pretty confident that Bitcoin is also going to make a move lower. So, yeah, man. And basically, I'm just watching to see if we get some type of real correction out of the stock market right now. Because if we get something like that, like, the NASDAQ off 1.6% today, put in a
Mm.
really big bounce over the last couple of sessions, but, giving it back. And if we actually see, stocks correct this year, maybe over the next couple of months, just
Mhm.
like they did last year, the same time, if we actually see stocks correct, well, then Bitcoin will enter the depths of the bear. And that will
Mm.
be a gift for all of us because it will
That
mean,
have dry powder.
bro, yeah, you gotta have some dry powder, bro. Like super important, man. Like
Yeah.
I right now I'm here. Let me go ahead and share something else. I want to share about let's do this. I want to share about distribution. So Mike, can you read this here? Can you see this from Gemini?
Yes.
This yeah, so
You, you
this
might,
is
if you can, you might want to zoom in a little bit.
okay. So I think I've zoomed in. Is that any better right there?
Yeah. Yeah.
Um, a little bit. Okay.
Yeah.
So this is just about Wyckoff distribution. Okay. So what I want to focus on
Whack.
here is yeah. So Wyckoff
A
Wyckoff
whack
was a
off distribution.
yeah man. Well, I mean, uh, yeah. So like the Wyckoff, this is like some guy, right? In fact, since I've got this open, let's just find out who is Wyckoff in trading. Who is Wyckoff? Let's see here. Richard D. Wyckoff, 1873 to 1934, was a pioneering technical analyst and trader who developed a widely used, enduring method for analyzing markets based on supply, demand, and volume, focusing on identifying quote unquote smart money institutional behavior. And he created the quote unquote composite man concept to model market manipulation through, and this is important, accumulation and distribution phases. So let's
So
go
it's
ahead.
basically buying and selling, correct?
Yeah, but buying and selling importantly at tops and bottoms and the
Oh,
types of,
absolutely. Well,
yeah,
it's important to understand that what smart money does is the opposite of what the majority does, and that's why they keep getting richer. And most retail, basically gives up their liquidity, is because they're buying when everybody else is selling, and they're selling when everybody else is buying. You have to do like the opposite of what you feel is right.
right. And you've also got to have a longer time horizon. Like you can't be thinking, oh, I've got to make 10% this month, or I've got to double up this week, or I'm going to trade zero DTE options. Like, don't do any of those things, okay? Especially if you're not like an institutional trader. Like, if you're a professional institutional trader and you're getting paid one or two or $300,000 a month to do your job, well, then you know what the hell you're doing, and okay, you go do that. But
Yeah.
if you're like, just a guy named Bob and you want to learn about Bitcoin and Ethereum and crypto, you don't want to jump in and start trading perps with leverage. Okay, that's a bad
Yeah.
idea.
Yeah.
What you want to do instead is you want to build a skill set and you want to learn about how to identify buying opportunities and how to identify selling opportunities. And you need to start to think in terms of cycles. So Bitcoin, I don't know why, but it does have a cycle. And that cycle is like 4 years long. And so literally all you got to do is buy below the 200-week moving average or at the 200-week moving average, and then sell when Bitcoin gets extended to the upside from the 200-week moving average. And that takes years. That
Well,
you can't.
it's got to sell whenever anybody, people are buying cartoon NFTs, and
Oh
they're buying
man.
property, and you just you know at least start taking some profits at that point, because I mean that's honestly like what I've seen. Every cycle, from what everybody says is, there's that euphoric stage where just everyone is, freaking screenshots of their profits, and all that sort of stuff. It's something that we really didn't see this cycle. We never really got to that point, but um,
Yeah. So what I see, Mike, is in the stock market, I think the stock market is going through a Wyckoff distribution. So the
okay,
distribution happens at market tops, okay? But the accumulation happens at market bottoms. And so I don't think that we are anywhere near a bottom yet in Bitcoin. But I think that we've gone through the preliminary support. I think that we saw, an initial selling climax, I think we've seen, a basic rally, a bear market rally. We saw a little bit of a bear market rally just yesterday, but we haven't gotten to the secondary test yet. So we haven't gotten to these last 3 points. The
Well,
secondary test.
let me share something because
Yep.
it's definitely in line with this. So Eric Balchunas says $500 million into Bitcoin ETFs yesterday, biggest day in a while, positive 750 million over the past 2 days, right as obituaries were being published. They needed it to, like a hitter in a slump going yard. Year to date is now under 2 billion in outflows. Unclear still though if this is a legit start to a rebound or a dead cat bounce. And
It's the
you had said,
latter.
yeah, you were saying dead cat bounce, but the ETFs are, it's still a net negative, but there has been a surge in buys. So just, something to kind of throw out there.
Yeah, so I see in the chat, you can't buy if you don't have any powder. Jacob, you need some powder, my man. And
He works at
just
a ski resort, and he was complaining that they don't have any of that kind of powder either.
right. Yeah, man. So I think right now the most important thing is patience. If you're just sitting in cash, all you got to do is nothing. Just wait and earn like 3 or 4% in DeFi on Aave doing nothing. If you wait until April or May, I bet we're
Mhm.
going to get some phenomenal buying opportunities, man. And I'm thinking about Bitcoin at or below 50K. I'm thinking about ETH at or below 1500. I'm thinking about Solana at like 20 or $30. I'm thinking about a handful of different altcoins that I've got my eyes on, like maybe Sui at like 30 cents. Um,
Is a
you
brew that
know,
we
uh,
have all
there's
the ingredients.
there's a handful of others, but
Yeah.
wouldn't surprise me if we get amazing buying opportunities over the next couple of months. And then if those opportunities show up, here's what you do: you buy spot, and then you do nothing for the next
Yeah.
2.5 years. That's literally
Mhm.
it. Like
Yeah.
it's stupid simple. Like keep it simple, stupid. Keep it stupid
Mhm.
simple. Be patient, sit in cash, don't lose your money, wait for the opportunity to buy, and then
Mhm.
buy, and then go do something else for the next 3 years. That's it.
Mhm.
It's that simple. So
Well, and
that's
I
yeah.
want to play this real quick because whenever you see these major news outlets and these big money people, like this, and this right here is freaking Paul Tudor Jones. Whenever you see them going on major news networks and telling retail to buy, usually that means you should be selling. If they say sell, you should probably be buying. So, the whole, like, and anybody that pays attention, they understand this because this is how they basically manipulate the markets. But let's see what he has to say.
Well, what I'd want to have a combination of gold, crypto, and my guess is that I think all the ingredients are in place for some kind of a blow off. Will it happen? Again, history rhymes a lot, so I would think some version of it is going to happen again.
Right.
If anything, now is so much more potentially explosive than 1999. 1999, we were looking at a rate hike in November. Now we're looking at a rate cut. We were looking at 4 more rate hikes before we actually topped in 2000. Now we're looking at 3 or 4 rate cuts, probably at least. So you have monetary policy that's going to take us to real rates of 0 or less, probably depending upon the next Fed chair. And then the big difference is obviously fiscal policy. We had a budget surplus in 99, 2000. Now we've got a 6% budget deficit. So that combination, that fiscal monetary combination, is a brew that we haven't seen since, I guess, the post-war period, early 50s, something like that. And that was crazy times, right, coming out of the war.
Well, you think that most people who are watching us now, you need to be in this market now. But then the question, as I said, is you have to jump off the train before the train crashes. If you're suggesting the train is going to crash.
I'm not suggesting the train's going to crash. I'm suggesting that we're in a period that's conducive for massive price appreciation in a variety of assets. Will it happen or not? I don't know. There's, if you kind of just look, if you just think about the leverage that we had in 1999, you look at margin debt, and then you look at today margin debt, but you have to throw in leverage ETFs because people don't use margin like they did back then. We're probably a little more elevated than we were in October of 99. It will take a speculative frenzy for us to elevate those prices, right? It will take more retail buying. It'll take more recruitment from a variety of other, from long short hedge funds, from real money, et cetera.
I want to stop it right there because he said something. It's going to take more buying from retail. And I honestly feel like that's why they go on these shows and, tell people you need to have exposure to crypto. You need to have exposure to gold. You need to have exposure to silver because they want you buying at the higher prices. Because whenever the markets dip, or if they dip the markets, then they're able to buy in at a lower price. That's how they make money.
So
Basically this is, they're using a bunch of fancy, terms that most retail don't understand to get them to FOMO into a lot of these assets right now.
yeah, man. So Paul Tudor Jones, PTJ,
Yeah.
he is a legend. So like, as far as traders go, this guy is like top tier legendary status.
Yeah, at Warren Buffett level. Yeah.
Yeah, he's like just a trader though. There's a really great documentary about him called Trader that follows him when he was in his mid 30s, and that was when he made his real first money, which by the way was like $100 million in a day when the stock market crashed in 1987 on Black Monday. He made like $100 million that day because he called it. He called it. He got in position, in size before the crash, and the rest is history, as they say. So this guy knows what he's talking about. But
Absolutely.
I've seen this interview before, and so the timing here of this interview, this is not recent. This is from last year.
Yeah.
So what he's talking about, all of the pieces are in place for a blow off. I don't know if did we already see the blow off? Like, did we see it in gold and silver? Because if there's going to be a blow off top in stocks, man, it certainly doesn't seem as though there's going to be a blow off top in stocks because all this private credit stuff blowing up, software blowing up. How do you get a blow off top if software and private credit is dumping? So I don't know. And that wasn't the case when he released that interview. I think that interview came out like in September of last year or something like that.
Here,
So
let me see quick.
yeah, but he really knows what he's talking about, man. And buying gold, buying silver, buying metals, buying Bitcoin, buying maybe speculating on ETH and Sol and maybe a couple of other alts, holding stocks, all of these things. These are all risk assets. Now, gold and silver started to trade like risk off assets because the dollar is not exactly doesn't hold its purchasing power, it doesn't hold its value well. Like if you hold dollars in a bank account over the course since 2020, you can buy half as much stuff now because we all know what happened during the pandemic lockdowns and the policies enacted by the Biden regime and the Fed during that period of time. It led to 40% price inflation, 50% price inflation for everything, or more, depending on which item you're talking about. So all that meant was the value of the dollar, the purchasing power of the dollar, got cut in half over a very, very short period of time. So yeah, that would be great if you hold gold, if you hold silver, these monetary metals. They appreciated, they had their respective blow off tops. They put in parabolas, but we haven't seen that out of the NASDAQ. We haven't seen that out of the S&P. And if you hold the NASDAQ and the S&P, you're just breaking even against the inflation rate of the dollar.
Yeah.
Yeah. Yeah.
No, and
So,
that's an important important fact to understand is that if you're not outpacing inflation, then I mean, basically you're breaking even. It's like, yeah, you might be making 7 to 10% on your investments, in like traditional markets or something like that. But if inflation is 7 to 10%, you're just basically maintaining the buying power of your portfolio. You need to outpace inflation. So there's a lot of variables that you need to understand to, fully grasp. And I feel bad for people who don't understand this, because there's a lot of people, that are older, that still hold to that mantra of I have my nest egg in savings, and I earn 5% or I earn 3%, and I live off that, my social security, and I'm good. But they don't understand that it's losing buying power. That, they might have been making $3,000 off of their investments, that they could spend per month. But now it's like having $1,500 to
right.
buy the same stuff.
Right.
And it's people need to get financially savvy enough to navigate the rough waters. There's I see a storm on the horizon. And this will
I
be my
mean,
closing,
yeah.
but I see a storm on the horizon. And
Yeah.
if you're not prepared for it, you can't get prepared during a storm. You need to get prepared before a storm. So educate yourself and get your ducks in a row, get your, freaking batten down the hatches, because it's, there is a lot coming down the pipe right now. And if you're not ready, it's going to get real ugly. So what's your closing thoughts, David?
Yeah, man. Well, I watched the State of the Union address the other night,
Yeah,
and
we love.
I thought it was great, man. 10 out of 10. And so I don't want to think that a storm is coming. I don't think a storm is coming. I think that the storm is just a normal market correction. I think that's what's coming, is a normal correction. We need corrections in a healthy bull market.
Oh,
And
I'm talking about in an overall sense.
oh, oh, oh,
Jobs and AI and robotics and the overprinting of
yeah,
money and just the
yeah.
whole.
Yeah, I'm just, and I agree with that sentiment. I do, um, because there's so much uncertainty around what AI is actually going to do.
Yeah.
But I think when it comes to markets, though, when I look out over like the next year, the rest of this year, I think that crypto is going to continue to move lower, which is going to give us amazing buying opportunities. I think that the S&P and the Nasdaq need to correct, like not by much, maybe 10, 15, 20%, but there needs to be a correction that is healthy in a bull market, because we are in a multi-year bull market still. So I think we're going to get great buying opportunities in crypto this year. I think we're going to get buying opportunities in equities this year. I think that, we've got to start to move away from this mindset of denominating everything in dollars. Like for us as digital asset investors, I think we really need to start denominating things in sats, denominating stuff in Bitcoin terms, because Bitcoin is actual hard money. Dollars are not. So of course I get it. We all live our lives in dollar world, but start thinking in sats a little bit. It'll do a lot, I think. Um, yeah, man. I'm looking forward to the rest of this year. I think that there are going to be great buying opportunities. And when the correction comes, you got to make sure you got that powder on the sidelines, man. You got to have that powder available so that you can pick up these deals, because, they always talk about smart money. The smart money is just patient and is
Yeah,
willing to wait until,
discipline.
yeah, man, it's just disciplined patience. That's all it is. You
Yeah.
sit on your powder, you wait for an excellent deal, you buy that deal, and then you do nothing. And you sit and you wait, and then you sell it when everyone else is getting excited about it. That's all it is, man, in a
Yeah,
nutshell. So that's what I'm doing.
perfect. So I want to give a quick shout out and remind everybody. So over on the arena, appreciate we got 16 people over there watching our or our first show, over there with the node, and we got a couple of hundred watching on our other socials. So if you could, let's add this to stage. If you could come on over to the arena and follow us at the Node channel, and then also on X. Let me zoom out a little bit here. Same handle at the Node channel, and we'll go to profile and show you that. But yeah, we already got 24 followers just since this morning.
Wow.
I just made this account this morning. So yeah, no, if you could, follow the Node, because starting Monday, this is going to be a 2-hour show. Mondays, our guest is going to be Taylor and Texas Jeff. Pretty much every Monday that they're able, that they're available. Taylor, as you all know, is my brother. He owns a couple of law firms and title companies. He's an estate lawyer, so he's very knowledgeable about wealth management, tax mitigation, things like that. And Texas Jeff is a licensed financial advisor and been doing it for decades. So traditional finance. And then of course we have David as our DeFi expert, and me, I'm just the comic relief. So I help dumb things down. So again, the way that the format's going to be is at the beginning we'll have news, we'll have guests and interviews in the middle, and then we're going to end with lessons from DeFi University. David's DeFi University. So excited to get that going, get that kicked off. We'll be working on that the rest of the week and this weekend. Getting the website and all that going. But appreciate all of you helping us grow that. And with that, Veteran Crypto out.
Peace.